Another take which I want, like another statement on which I want your take is that on VIX product, right? There are ETFs, ETNs like VXX, UVXY, SVIX, etc. that let people trade volatility indices like VIX. We saw with the VXIV ENT in 2018 that these can blow up. Some people say these products are flawed by design and retail traders should avoid trading them. So what's your view on this?
Yeah, so well, first of all, let's separate traders from investors. If you are an
Yeah.
investor, you almost certainly shouldn't be trading those things because um, they are often they're trading tools, and and this is disclosed oftentimes, especially like these levered, like if you have any kind of levered product, that's especially true for them. The And also, the nature of the products is short term. You're trading an ETF that holds a 1 month future. It is by definition short. Yes, it does roll. It is constantly rolling. But at this point, if people don't understand negative roll returns and that cost over time of that, I mean, this has been harped on and it's all disclosed, and at this point, it's just willful ignorance. I would say that if you don't understand these things, then you really should not be trading them at all. So I would say, first of all, they're not great investor tools, but as trading tools, for the most part, they do what they say they're going to do. Now, uh, I think the problem you get with these products is that like any tool, you can misuse it. I mean, you can drive over people with your car, right? So it's any tool you can misuse it. The problem is that in service of marketing and distribution, we dumb things down, right? There's and so there is an incentive to dumb things down because that's how you sell. So, uh, but that said, you know, this gets into sort of like, how much nanny state you want to be about these things. I mean, do we not want to create useful tools because there's somebody that is going to do something stupid with it? I don't think you can kind of run things that way. So you end up, it also, this kind of makes me think of there was this comedian here, this comedian Dennis Leary here in the States that was very popular sort of like in the 80s and 90s. And like, he's got this old joke about if you made the warning label on cigarettes, the entire box, and you put a skull and crossbones and you called them tumors, like the smokers would be lined up around the block to get their hands on these things. Like at the end of
Yeah.
the day, you can put whatever warning labels you want. There's already so much compliance in TradFi. There's so much regulation, and yet you see people doing insane things in DeFi. If you want to do crazy things, no one's going to stop you. There is always a way to do crazy things. So my view on the VIX tools is if you use them in the surgical way that they are designed, it's fine. It's another choice. Um, Investors should probably stay away from them. And if you're an investor, you're probably not looking at things. You don't want to be that short-term oriented anyway. I mean, once you start adding up like the tax liability with these things and short-term trading, and unless you're going to like form a business around trading, uh, you probably do want to avoid these things. Like in the long run, they end up being expensive behaviorally.